Hello everyone and welcome back to Trade Small Think Big, learn the psychology to become a successful stock trader. My name is Alexander and today we have a very good presentation, and this channel and these videos are here to help you develop the proper mindset and the proper psychology to become a successful stock trader. And that is by far the biggest difference between any trader and all traders, is the psychology and the mindset they have to every situation that they are presented with when they're going to make a choice, a trade, or a decision. So hopefully today's presentation, you will be able to get something out of it to implement to your trading to help deal with today's subject. And today's subject is a very good one, and we're going to talk about dealing with greed. And what is greed? The difference between greed and proper execution, getting lucky versus greed, trying to force your outlook on the market. So before we go into these 4 points about greed, I just want to tell everybody that we all get into trading to try and make money. And if you are gonna start trading, it's very important that you understand that trading is a process of developing skill to extract profits from the market, to understand probability, and to understand that every situation that you're trading is unique. And that's the kind of skill mechanically that you need to develop. And then there are the emotional barriers that traders have that can hinder their progress, because they go into the market with a certain expectation and a certain mind frame that will not let you develop in a proper way, and will actually hinder your growth and hinder your process. For anybody who's been trading for a while, they'll understand that what they thought at the market, or what they thought the market was going to be, and their interaction with the market at the beginning, even a few months later, it doesn't even matter if it's 2 months, 3 months, 6 months, or a few years. It's an evolving interaction, not only with yourself, but how you look at the market, interact with the market. So we're going to talk about one of the emotions that traders deal with at all levels, and this is not above me. I dealt with this, and I'm sharing my mistakes, and I'm sharing how I got from point A to point B. So I'm not above any of the subjects that we talk about in any of these videos. We all go through a certain journey while we're trading, and I'm just sharing with you how I deal with greed and some of the steps that I took to help me deal with it, to get me from point A to point B, and help me change my outlook and help me understand what is the correct decision to make at certain points. Also, for new traders, please, I know you get into trading because you want a better life and you want to take care of your family financially, but trading is very, very risky, and you have to understand to protect your money. And there's a lot of emotions involved, and people interact with money very differently. Money means many different things to many different people, and that's what comes up in trading. How you view money, how you deal with money, how you interact with money, how you handle money will come out in trading. Therefore, greed is something that you're going to have to deal with and attack from the roots, and you have to make sure you eliminate it. And there are ways to help you deal with that on a trade to trade basis, where you eliminate it and to a point, and it just becomes mechanical. Everything becomes mechanical, and that's how you start eliminating emotions from your trading. So let's get into it, and I hope everybody's having a great day and had a great weekend. What is greed? Greed is wanting more than one needs. And let's dive into what does this mean in trading. In trading, greed is when you want more profit from a trade that is not there. What does this mean? If you're up 200, 500, 1,000, whatever the amount is, and your signals, your profit-taking signals, or your profit-taking criteria is telling you you must get out, or you must take your profits, or you must scale out, and you don't because you want more. That's when you have to identify, have self-awareness and saying, hey, I'm in a situation where I'm feeling greed. I'm in a situation where I am not following my profit-taking parameters or my profit-taking rules. I'm in a state of greed mentally, and I need to snap out of it and follow my plan, the plan that I wrote out way before I entered this trade to help me deal with this, so I can have a roadmap that if I encounter this situation in my trading, or I'm encountering this situation presently, what is the protocol? What are the rules that I have in place to help me eliminate greed and trade only with my rules? So having profit-taking techniques is crucial, because now you're following your plan. You're a plan-based trader. You're a rule-based trader, and this is how you start eliminating emotions from the market. Now, maybe you're saying, hey, it's gonna go higher, and maybe it does. But you have to understand, if you don't follow your rules in the long run, you're going to hurt yourself, and you won't get to the point where you want to go in your trading journey, your evolution as a trader. So greed is wanting more out of that trade than the market is giving you. If the market is saying, hey, we're not going up anymore, you have to interpret that and say, I need to get out and take my profits and wait for my signal to trigger, wait for my entry parameters to trigger, to signal for me to enter again. You cannot force anything onto the market. So always remember that. Have your rules in place of taking profits. If you are in a situation where you're dealing with greed, look down at your trading plan and execute that plan. You'll be way ahead of the game than most traders, because most traders don't have a trading plan. So even if you have a trading plan and you don't even follow it, at least you're one step closer to implementing it, because you want to at least have a plan and then try and implement it as disciplined as possible. Let's go on to the next point. This is a very good point, and I hope you stay along for the entire presentation, and I hope you're enjoying it. Difference between greed and proper execution. This is a very good one, and I hope this resonates with all traders. If you're looking at your signals and you already made up your trading plan, and your trading plan is indicating that you can get a large profit, and it's a very high probability, because that's the way the market and the stock or the instrument that you're trading is setting up, that is proper execution. And that's the difference between greed, which is forcing the trade to give you more, as opposed to the trade outcome is potentially pretty big or great. I'm going to say that again. The difference between greed and proper execution is greed, you're already in profit and you want more, but the market is telling you, hey, you need to take your profits, you need to exit the trade. Proper execution is, this trade indicates it's going to be a big profitable trade, because my signals have indicated that. The market has developed into a situation, has created an environment where my signals are going to create a larger profit. Now, another sports analogy, and this is in reference to basically anything in life, baseball or any other sport, you have to hit the singles, doubles, and then eventually your home runs come. That's the same situation. If the pitch is not there, you cannot try and hit a home run, because you're going to end up striking out. So that's very important to understand. Proper execution, when the market sets up for you to make a big profit, you must execute your plan and execute that correctly, and you'll be fine, because that trade gave you a large profit. That's perfectly fine. But in trading, you're going to have different types of profits. You're going to have break even. You're going to have to manage losses. You're going to have to manage, let's say you gave back a little bit of the profits, and these are all the emotions you're going to have to deal with. But today we're just talking about greed and the idea on how you view the market and how you view and understand money while you're trading. Let's go on to the third subject. Getting lucky versus greed. All these subjects kind of, it's like a spider web. It kind of interacts with each other. It's like a big highway that you can all connect and kind of get out of the exit and hop back on. So getting lucky versus greed. This is a good one, because just the other day, Tesla, some news came out, and the stock in the middle of the day shot up like 30 points, 20 points, something like that, in a matter of like 15 minutes, half hour. Now, if you were long and that happened, that's great. You just got lucky and you just made a massive profit, right? You cannot control that news came out that the CEO wanted to take his company private at $400 and something. So once the stock starts shooting up like that, you have no control, because you technically don't have any control over any of your trades. You don't move the market. You're just there to interpret the information the market gives you, and you place your trades based on your rules. So if you were long because your signals indicated, hey, I need to go long Tesla, and the stock shoots up in a matter of minutes that much, then great, you got lucky. For beginner traders, if you're in a situation like that and you were able to capture such a huge profit in such a short period of time, psychologically that's very damaging, because now you look at the market like, hey, this can happen at any moment, any other day, or something like that. And now you start trading and looking at all these stocks like that. Now, greed is very elusive. Greed has different levels. And once again, you look at another stock, hey, this might have some news, hey, and you start breaking your rules and start breaking or disregarding your rules of engagement and entries, and how to you disobey your trading plan. And this is when you start losing discipline, because you're focused on the money. You're focused like, hey, maybe IBM could do this. Hey, maybe Apple could do this. And then you start noticing that the market doesn't shoot up that much, or it's a very small range, or it's not trending, and you start getting frustrated. You start forcing trades. You're not paying attention or following the rules of taking profits, even though it was small profits, and you have profits turn into losses. Once again, there's variations of greed. It's not all just about big money. It's also about what we spoke about before, which is proper execution. If the market gives you a small profit, you take it, because that's what your signals indicate. If you get lucky, you take it. Now, imagine the people who were short on Tesla, and they think, hey, nothing's going to happen today, or nothing's happening. Let me just walk away. Let me go to lunch. Let me go do something else. And they come back, and the stock is almost 30 points higher from their entry. And I'm almost 100% sure there's a lot of traders that happened to, where they walked away from their screen, didn't set their stops, thinking, don't worry, nothing's going to happen, being not respectful to the market, not being cautious. They come back and they have a huge loss in their hands. So there's always two sides to the coin. So just, if you get lucky, take it, be appreciative, follow your rules on the next trade, and continue the process of entering and taking profits, so you eliminate the fact that you deal with greed at different levels, and you just trade your plan and start being more rule-based. Let's go on to the final one, which is trying to force your outlook on the market. And this kind of ties into all points. You want the stock to go higher, and if it's not going higher, you can't do anything about it. It's just simple as that. I know it can be frustrating, or sometimes it's just going zigzag, or not really going up or down, and you're not sure, and you start getting confused. If you're in a situation like that, you can always lower your position size. That always kind of takes away the anxiety and the stress, which is another few emotions that we will talk about in future videos. Lower your position size if you feel uncomfortable. Hey, there will always be opportunities where your trigger when your edge is gonna trigger, when you're gonna have the signal. So if you're uncomfortable with this, you're in a scratch trade, no problem. You exit. You just wait again. It's not a problem. You just wait for the next fish to come and get a hook on your line. So there's no need to force anything on the market, because you can't dictate what the market does. If it looks like it's supposed to go up and it goes down, you can't do anything about it. If it's supposed to go down and it goes up, or up and it goes down, you can't do anything about it. All you're there, once again, is to interpret the information the market gives you. And how you interpret that is what we're trying to help you develop here, in getting the proper psychology and understanding how to develop your eyes in interpreting this information that the markets give you. This is a visual game, but these, just like looking at a picture where you say you have happy thoughts and you look at another picture and you get sad thoughts, all these numbers and all these opportunities to start playing with your psychology and mindset, and you start veering off on what's possible and what's not possible, and sometimes it's an illusion. Always remember that the market's there to make you lose your money. And once you start understanding that, when you're engaging with the market, you'll understand that every single rule you have in place dealing with greed, and any other rule, is to help you eliminate any potential error. Errors in the market cost money. So I hope you found this presentation very helpful. We went over what is greed, the difference between greed and proper execution, getting lucky versus greed, trying to force your outlook on the market. And I hope now and tomorrow, this week's trading, you'll have a better understanding to stick to your rules, so you don't have to engage with greed. If you find yourself in a situation where you're dealing with greed, just look at your trading plan and say, hey, I got to deal with that, and don't worry about it. There's going to be other trades, other opportunities, and you're going to be just fine. The traders who follow their game plan are always going to be more successful, more disciplined, and more rule-based. And those are the traders that stay alive long enough to get lucky and get into a trade where they're long Tesla, and all of a sudden they make a few $1,000s in a matter of 15-20 minutes. And you're like, wow. So go for the singles, go for the doubles, and eventually hit the home run. As we all know, most home run traders strike out a lot, but you're a good trader and you're developing. So if you have any questions, if you have any comments, please leave it below. Subscribe. If you have any ideas on any future videos, please leave it below, and I'll be more than happy to address it. If you have any questions, I'm Alexander. You can email me at TradeSmallThinkBig@gmail.com. Once again, it's TradeSmallThinkBig@gmail.com. And always remember, the biggest risk in the market is you. Until next time, protect your money, protect yourself, and just follow your trading plan, and I'll see you next time. Thank you very much for your time. Have a good day. I'll talk to you soon. Bye. Should I buy the stock? Should I short the stock? Should I hold on to my position? Should I close my position? Trade small, think big. Learn the psychology to become a successful stock trader.